after this class. See, I wasn't hearing any of what you guys are saying. I didn't even know I was sharing my screen. But I'm sharing my screen now. So it's shared. Don't worry, I've had classes before these classes. So I'm sharing my screen now. All these people raising hands to speak, do not interrupt me. Even though I allow you to speak, do not interrupt me. Right? So let me start over. Or yeah, no, I don't even start over. Okay. I just started recording. Let me start over. So liquidity, right? Liquidity means what? Money. Now, apart from liquidity meaning money, that's the general term of liquidity in the forex market means money. Apart from that, the logical definition I will give you about liquidity, which, like I said, you can carry it everywhere, is that liquidity is every high and low of the markets. Every high and every low that these markets make is a liquidity, right? It's a liquidity. See this low? It's a liquidity. You see this high? It's a liquidity. This one, liquidity. This one, liquidity. This one, high, liquidity. This low, liquidity. This high, this low, liquidity. This high, liquidity. This one, liquidity. Liquidity. Right? Right? Sorry. Let me just down. Sorry, what's going on with me? This low, it's liquidity. This low, a liquidity. This low, a liquidity. This low, a liquidity. This high, a liquidity. This high, a liquidity. Now, you guys might have heard the famous saying. What's the famous saying? You guys might have heard the famous saying that the market is after liquidity. You guys must have heard it somewhere, maybe on Twitter, TikTok, Instagram, from your mentors, maybe. And then they tell you the market is after liquidity, which is very true. Now, for them to tell you the market is after liquidity, and I told you liquidity is money, and not only liquidity is money, liquidity is every single high and low of this market. So now, for them to tell you the market is after liquidity, if you use this in a logical term, how does the market move? How does the market move? We have two major types of movements, right? Apart from, of course, apart from cancelling out this ranging, cancelling out the ranging movements in the market, we have two types of movement. We have what? An uptrend. What is an uptrend? Uptrend is a series of break of structure, and then they are telling us that markets moves in a series of break of structure, right? But this break of structure is to the upside. And a downtrend, meaning market moves in a series of break of structure to what? To the downside. I don't know if you guys are seeing what I'm saying. Okay, right? Market moves a series of break of structure to the downside, right? And this, they're not telling you that market is after liquidity. That means the nature of market, everything is just liquidity. Because I just told you that highs and lows of the market are liquidity. And for something to break structure, it has to take a high. For something to break structure, it has to take a low. Are you seeing the logic now? Are you seeing why they are not saying the market is after your liquidity? Are you putting the logic together? So now, even the market movement is all about taking liquidity. Break of structure is taking the liquidities, but it's just that break of structure is taking liquidities to the high side, to the upside. All these highs, they will still be taken out. Why is markets taking them out? Because it's a liquidity. Liquidity is something you'd want to take, such as money is something you'd want to take. Now, again, to this downside, liquidity. Market is taking it out because, and that is the movement of markets. Trending down and trending, and when it trends down, it breaks structures to the downside. When it trends up, it breaks structures to the upside. And then when it does these two, it's overall, subjectively, it takes liquidity. There's no way markets will move that it's not taking liquidity. And that's why they said market is after your liquidity. That is the logic. Now, the only difference that you might be stuck with is that, so which liquidity will you now take? Which liquidity do you now know that you will now take as per when you want to enter your setup, right? Which liquidity would you now take when you want to enter your setup? Then that's when you now see the difference between what? Liquidity and what? Inducements. Right? Sorry, my school is hosting drama nights. So there are a lot of voices in the background. So now what is now? This is
Ma,
now
we
where
can
you
see your
now
screen.
begin to now enter the difference between liquidity and inducements. When you start asking yourself questions, if market is liquidity and all market does is take liquidity, which liquidity do I now want to now enter? The market will now take it and go my way.
Ma,
And that is now the difference between liquidity and inducements. That's the key difference. Now, what is the difference between liquidity and inducement? An inducement can be a type of liquidity, but not all types of
ma,
liquidity are inducements. I'll take it again. All inducements can be types of
screen. We cannot,
liquidities. You cannot what? Sorry.
we cannot see your
You cannot
screen.
what?
I think
How?
we can't see your screen. Your screen.
Really? My screen is I'm showing my screen now. It's showing. Who
I can
else
see
can't see my
his
screen?
network. His network.
Okay, James, you'd have
We
to.
can't see
You'd
it.
have
We can't
to.
see the screen.
Hey, Jesus Christ. Some people can see it. Some people can't see it. I don't know what to do, honestly. Because
I see
most people are
his
saying,
network.
please, if you can't see it, go and rejoin again, restart your network. Because some people are saying they can see it, right? So just try and rejoin again so that you can see it. I don't know. Because a lot of people are saying they can see it, right? So I should really get this thing, a moderator for these things. So now, see, I forgot what I wanted to teach you guys again. What I wanted to teach you guys, I've lost my head. Okay, so what was I saying? All inducements are types of liquidities, but not all types of liquidities are inducements, right? Now, when you talk about type of liquidities, that's when you see your double bottom, your double tops, your 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 trend line, right? Let me mark this: double bottoms, relative equal highs or double tops, your trend line, right? Your ranging markets, some might say your internal range liquidity, right? That's liquidity inside of a range or inside of a structure. Your external range liquidity, that's liquidity that's outside of a range or a structure. And then yeah, let me leave it at this tree for now. So now all these are types of liquidities, but then there are also types of inducements too. But there's a difference that would now differentiate liquidity and inducements. Now, liquidity, all these break or structures you are seeing, is also price doing what? Taking out liquidities. Because like I told you, every high and low of the market are liquidities. So markets taking out a break or structure is also markets making a break or structure. Jesus Christ. It's also markets taking out liquidity. Is that easy? So now you now start to ask, how we now know the liquidity to use for entry when we want to enter? Since everywhere is liquidity, which one we now know? Now that's the difference between inducement and liquidity. Like what I just explained now, liquidity, in this liquidity, market is taking it and still going in one direction. That is liquidity. Liquidity can happen in a sense that this is a liquidity. This high here is a liquidity. And market is coming for this high. Now market comes and market comes and takes this high and it's still trending up to take more liquidities of the high. It's still making liquidities and taking it and still taking pre-existing liquidities, right? But when you say something is an inducement, if this is an inducement, which could also be a type of liquidity, when market takes it out, market must reverse. Now that is the difference between your liquidity and inducements. Liquidity can happen when market will take it out and still be moving up. But anything that will make markets to take it out and reverse to the opposite side, that's inducements. That means the work of the market has been done, right? Market has gone to do what? Market has gone to take out the liquidity that it wants to take, and it will now go to your direction. Now, all these things that I did here can be forms of inducements if market takes them out and goes the opposite way. Example, you have a structure here and you have double double tops, right? Or relative equal highs. And then let's say you have a key level here or a POI here or anything. Markets taking this high out like this is a liquidity. Markets can take this as a liquidity. Markets can ignore your POI and still also take out this high too. After all, every high and lows of the market is a liquidity. But whatever will make markets take out this liquidity and reverse is now what you will now say that is this was what? This was an inducement. Meaning market has induced people, has made people, has turned people to liquidity, induced people and to go your way, right? That means market has done like it wants to act like a normal liquidity. That means taking things up and keep breaking structure. But then it did not act like a normal liquidity, like it should take something and keep going that direction, take a liquidity, keep going the direction. Instead, it induced people to thinking it will still go that direction, right? But then it didn't go that direction. It turned instantly. And this is your what? This is now your inducements, right? So that's why most times you see some people would mark something like this. Let's use for an internal range liquidity now. And then some people will mark here as liquidity. Some people will mark here as inducements. And they are still all saying the same thing. It's just that what will make the price come now, because they want to call this an internal liquidity. Why do I say this is an internal range liquidity? Your break of structure, let's say, is your range, right? And I told you every high and low of the market is liquidity. This is a high, right? For this to be a high, that means what? This is a liquidity. This is a high. That means this is a liquidity because highs and lows of the market are liquidity. What is now making this an internal range? That this high of a liquidity is internal, is inside this what? Your break of structure range. Is inside it. Is inside this your break of structure range. Whatever from here to here, anywhere, is inside this range. So this is what you call an internal liquidity. Now, your external liquidity, like I told you, what did I say? Every high and low is a liquidity. This is a high. What is this? A low. And this low is what? This low is outside your what? Outside your range. Because if you now draw this again, same thing. This one is what is this high is what is inside the structure, internal range liquidity. This one is what is outside of it. So that is just an internal range and an external range liquidity. And this is what mostly shows. This is what mostly shows in what's it called? In setups of modern days. And now then you now see price trending up to it. And then price doesn't just take this liquidity and keep going. No, price takes it and then comes your way to take out this external liquidity. Now, people can mark this place now. Some people will put it inducements. Some people will mark this one as liquidity. But you will never see someone marking here as inducement. Why? Because they know that when price can come here and break structure, it has the tendency to even keep going down and down and down and down again. In fact, some people even extend their TPs. And markets will just keep going down for them, going down, going down, going down, going down. But if someone should mark this as an inducement, meaning price can come here, take it out, and then turn back up again. Because it has taken what it wants to take, induced people that it should keep going down. Induce is the trick, right? It's from inducement is gotten from the name trick. So it has tricked you that you keep going down and then turn all the way up against you. And that is when you now get the difference between your inducements and your liquidity, right? That's when you now know that, okay, so this is what I'm supposed to look for. I'm supposed to look for my inducements, which are the types of liquidities, but it's just that this one, when market takes it, it has the tendency to reverse the opposite way. And that opposite way is your direction, right? The opposite way is your direction. So a lot of people then come to my DMs with questions like, how would I know the liquidity or inducement stake? So we're going to be looking at things like that. For example, say this was a breakout to the upside. Sorry, this was a breakout to the upside. Now, this like this can be considered as what? A low of the market, because it's a low inside this market. And I told you all highs and lows are liquidity. This was a high too at this point. So what happened? Market took out this high, it turned. Now this is a liquidity. Market is coming to take out this low. Closest key level to this low is you can call this level or this zone. And the market taps here and then takes this out. So now, if this is a liquidity, and this liquidity was inside of this whole structure range, yeah, this liquidity was inside of this structure range here, I can then call this my what? Internal liquidity. I can call this my internal liquidity. Why? Because this liquidity is inside of the range. It's not outside. So when price takes it, I'm expecting it to reverse for me. Do you get? I'm expecting it to reverse for me. Market broke structure here. It's the upside again. What do you have? A low. And I told you highs and lows of the market are liquidity. You have this low. Sorry. You have this low inside what? What is wrong with my fingers? You have this low inside your what? Inside your structure. And for this low to be inside your structure, that means this is an internal range liquidity or an inducement, right? Because it's inside of your structure. It's inside. That is why you see people call it internal range everywhere on Twitter, because it's inside of the structure. Now, people that trade other blocks and POIs might be looking for somewhere here. Although most of my students or people that trade key levels already know, most of my traders that trade key level, they already know the deal, closest key level to liquidity over here. Boom. And they tap a good sniper entry from here, and then they're up. Literally, they're up just like that, right? They're up just like that. If this was a break of structure again, I'm using internal range liquidity because that's mostly what shows up in the modern day market. All those double tops and double bottoms, you'd rarely see them. It's mostly the inducements part, the internal range liquidity, external range liquidity, B legs, engineered liquidity. Those are all those types. But we'll take it one liquidity at a time. So this class can be all about internal range. The next class we'll talk about B leg liquidity. And then we'll have another class talking about engineered liquidity. Then, yeah, would be. But let's look for examples of internal range liquidities. Like I said, every highs and lows of the market are what? Are liquidities. For every high and low of the market to be a liquidity, this is a low here, this is a low here, this is a low here. For now, which one will I now take, right? Well, then remember, this low, this candle is also a low. Now, market took the low and then turned the opposite way, which means inducement has happened here. Market has induced people that is going down, and then it turned the opposite way. So this place now has now signified me that the money started from here. There's a money here. There's a money here, right? Because markets fake people out and then went the opposite way. Meaning here is now what? Here is protected. Price took out a liquidity and broke structures to the upside. Most of you already know this. Here is protected. So here being protected already tells me that these other lows are not protected, right? Before price now broke structure here. Then price now came to this. And if we can see this low swept this low, so here could be protected too, there is no liquidity for this one. Now we need a liquidity before we take our setup. So this is going to be a liquidity. This isn't protected. It's going to be a liquidity, a low of the market. This isn't protected. It's going to be a liquidity. Then what happens? We wait for markets now came to what? Markets now came to this protected point. And it's protected because it had already taken a liquidity and broken structure to the upside. It had already done an inducement, right? It had already induced these people and went up. So here, people has already been manipulated. For you to induce people, that means you tricked them. That means you manipulated them. And you know the saying that you do not want to enter the market when the manipulation is happening. You'd want to enter after the manipulation has occurred. Now, since I told you price taking out a liquidity and going the other way is what? Is inducement. And inducement means manipulation. And everybody wants to trade after the people have been manipulated. Then the real moves now come. What does that now mean? That now means this is now when you should trade because people have been manipulated. And what do? You pick your closest key level and open close right here. You take a buy entry and then you fly your way up, right? Gosh, this is 30 minutes already. I didn't want this class to be long because if this class is long for you guys to watch the video, it would be stressful. Let's go again, Sha. This is now what? A breakout structure. Our market did what? Market took out all these lows of the market, signifying what? Liquidities. Market took it out and then turned the opposite way, which means what? And in this is now what? An inducement. An inducement means to induce someone, to trick someone, to manipulate someone. And remember the famous saying in Forex, do not trade when the manipulation has not occurred. Trade after the manipulation has occurred. Trade after the people have been manipulated. That type of blah 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 blah. Where do you think they got the logic from? That is what I'm trying to tell you guys. I'm not trying to show you guys pattern and I'll tell you when this one takes this high, this is protected. That's just pattern trading. If it's like that, I promise you, you won't even know when a place is protected like that. You'd always be looking for one pattern or the other. But I'm trying to teach you guys the logic with it. This thing is now what an inducement has occurred, which means manipulation has occurred. So what do you mean I want to see? It now broke out to the upside. What happened again? An internal range liquidity. Why? Because this is a low, and a low, every low is a form of liquidity. Now this low is inside what? This range. This low is inside this structural range. Meaning what? This is an internal range liquidity. Right? So what do we want to look for? Closest key level. Bam. You see that? Now, closest key level is what? Is this disrespected A-shaped key level? And then what did price do? Price did this, right? SL here, and then put up all the way here. Put up all the way there, right? Now this was Friday. This was Monday's trade. This was what? This was Tuesday's trade. This was Wednesday's trade, right? Before price now changed its storyline down. So imagine in a week you've already caught something like this, something like this, something like this, and I haven't even done any top down. This is just structure and liquidity, right? Doing top down might have shown you more entries than you even missed. Doing a full key level storyline of that, right? And three good TPs is enough for the week. In fact, if you're trading a prop firm and you've gotten three TPs, you shouldn't even trade that week. You should wait for the next week. Get another three good TP. You've passed phase one. In fact, that three good TP could even pass phase one for you. So this is what I wanted to share with you guys, right? This is what I wanted to share with you guys. The concept of liquidity, the difference between liquidities and an inducement, and how to use them to your favor, and then knowing what liquidity to use. So this is part one of the liquidity. So I talked about internal range liquidity. Another class, the next class of the liquidity, we'll be talking about engineered liquidity, right? Or ABC leg, but that ABC leg is all over the internet, so you can learn it from anywhere. But yeah, we would have a part of it. So, guys, this is what Mira or Lady Kilevo, Miss Kilevo, anyone, wanted to show you guys about liquidity. I really hope you learned one or two things of this class, right? And I really hope you go and backtest and study it. The logic behind inducements, internal range liquidity, and everything. And yeah, just backtest it and go crazy with it. It's your girl Mira, and I don't know, should I do a question depending? Nah, okay. So I'm just going to off this, and maybe our next class will have a Q&A session on this topic. On our next class, we'll have a Q&A session on this topic. For now, you guys should go and watch it, rewatch it, and backtest it. Then you can keep your questions ready. On our next class, we'll have a quick Q&A on this topic, right? In our next class, we'll have a Q&A on this topic. So goodbye, guys. It's been your girl, Key Level, or Mira.